like, following news and then getting into the charts. Not a lot has transpired since yesterday. So, you want to keep that in mind that this might be a great week for you to focus on psychology and not get overwhelmed with all of the market movement, the manipulation in the market this week. This is a very common thing to see at the end of each month and at the beginning of each month. So, it's no surprise that this week does look like this. I'm going to go ahead and share my screen and go over some news. As you guys know, NFP is tomorrow, which is non-farm payroll. It tends to go both ways. Sometimes we have an abundance of movement, and then sometimes we get absolutely nothing. Something to absolutely keep in mind is that next week is Labor Day here in the United States. So, there will be a market holiday, which means USD might not have a lot of movement. So, just keep in mind that this isn't something that you need to force. When you see your perfect setup, it'll be very, evident. You won't have to work too hard to see it, but it's important though, stay in the market, observe the market, don't overanalyze the market, do your initial analysis and then kind of throttle back and just allow price to play out. If you see something that's super clear and concise, by all means take advantage of it, but just be wary that this is a week of manipulation in the market. So let's go ahead and get into the news for today. So just looking at the news, we've already had some red folders pass by us at 8:30, which, that was a little earlier, so that really doesn't matter at this point. And you can see that looking forward into the day, we don't have any other news events. We have yellow folder. For those that were not on the live stream yesterday, just to give you a breakdown, yellow folder usually indicates little to no impact. Orange folder is medium, mild impact, and then red folder is supposed to bring volatility and high impact news. And sometimes, guys, it does move the market, and sometimes it does not move the market. But you just want to be aware. If I'm trading a USD pair like GBP USD, I want to make sure I'm looking at the news ahead of my trading day to say, okay, where could I see some high impact news? And I would have been aware that 8:30 there is some red folder news. A question that I get a lot of is, hey, do you trade during news? If I'm already in a trade and I see that news is coming, I still hold my trade. I don't do anything different. But if there is a red folder coming and I'm not already in a trade, I'm not looking to place the trade right at the news release. I may want to see what happens. But it's all really subjective. There's not one right way to go about news. News has to be dropped. News will either perpetuate the trend or run stop losses at your support and resistance levels. So something to keep in mind. Let's take a glance at tomorrow. 2:30, if you're trading any Swiss franc pairs, which I did trade a Swiss franc pair last night, 2:30 we do have some red folder higher impact news. So make sure you're aware of that. If you are in a trade right now, make sure you're moving break even when these news folders come out. Break even just simply means wherever you enter, make sure you move your stop loss to the exact entry point so that if the market does come back to entry, you don't lose any money. You really have to figure out ways, guys, to just find different techniques to protect your mindset. Number one, to protect your capital. The market is not always going to do what you anticipate it doing. It doesn't move immediately. There is a true waiting game in this market. And I always tell my students that it's what you do in between the setups that will make you a profitable trader. You'll hit your setups, but then when there's a gap of just emptiness where the market's setting up or the market's trying to run to a certain level, not over trading in those times or just being able to sit back will make the difference in your trading. So let's continue to look at this news. At 8:30, we have CAD news as well. So if you're looking at any CAD pairs, this can be great. USD news at red folder, which is the NFP I constantly mention. It's nothing to be scared about. It's just something to be aware of. You always want to know whether it's NFP or FOMC, whatever kind of news release it is, you want to know if it's going to impact the pairs that you're looking at. So we have the 8:30, and then we have more red folder news at 10 a.m. So we could see a little more volatility tomorrow, or we could see no volatility, right? We don't know until we demand the data. And what I mean by that is literally allowing price to print, allow the market space from yourself, right? You're not desperate for this market. The market needs you, right? So make sure you are sitting back and actually observing and allowing the market not to, tamper with your psychology. Make sure you are secure in your strategy, secure in how you want to approach this market day in and day out. And you'll see the success that you're looking for. It's just a matter of being patient, trusting yourself and waiting, demanding the data by all means. So that is what this week looks like, the rest of the week for news events. Again, going into next week, guys, there is a holiday, so the beginning of the week might be a little bit slower, but I do love that we're starting to turn the corner out of summer. After trading this market for 5 years, I noticed that when we start to round the corner and get into September, the markets really start to pick up and they start to trend beautifully. So if I have to just wait to get out of this week of manipulation, then I will wait. I don't mind. I'll be very selective with my setups, but for the most part, we're getting ready to go into the next couple of months, which will produce a lot of opportunities. So that is it for news. We're gonna go ahead and take a look at the charts, and I have a couple of charts marked off to share with you. I'm not looking to, put pressure on you guys to take a trade setup. Before I even show this, I'll just give you a quick breakdown of what I look for. So immediately when I get in the market, I identify if I'm seeing new highs or new lows. If I'm seeing new highs, I'm just simply looking for price to come back, establish some level of support to go higher, and I'm looking to find an entry somewhere in here. As you can see on odd Swiss franc, yesterday, I didn't want to call this one out on the live stream yesterday just because it was a little choppy. Like if you look at this movement, it's somewhat sideways. So this probably, wasn't the most high probability setup, meaning it might not have been the clearest to the eye or maybe missing some of the confirmations in my confirmation list. But because I've been trading for 5 years, I kind of understand the rules to break my own rules just a little bit. So with this one, I saw that we produced this new high on this 1 hour time frame. Guys, again, I am a 4 hour trader, so I do my analysis on the 4 hour, but then I hop down into the 1 hour to really see and identify my structure and my entry opportunities. So as you can see right here, guys, we have this new high in the market. I marked off this little level of structure internally to this previous high right in here. And I want to see if the market would come to this level and reject, and rejection, I constantly get this question, like, what does that look like? How does that paint on the screen? Anytime I reference rejection, guys, it just simply means if I'm looking for a buying move, I need to see a bearish, bullish candlestick close, or a variation, whatever you want to call it, in my, my areas of confluence, my point of interest. And as you can see, price pulls back, rejects my level perfectly with this bearish, bullish close. I actually ended up getting in on this third candlestick right in here. I don't have my stop loss all the way down here. For me, I'm like, hey, if I get stopped out with 11 pips, then so be it. But I'm looking to make about 30 on this one. Again, guys, this is odd Swiss franc. This isn't a super volatile pair. For those who are my students on this live stream, for those who know me on my Instagram, I like the slower pairs. I am not a GJ trader by any means. I don't like too much volatility. I like slow moving pairs because I think it gives you ample opportunity to analyze number one, to demand the data number two, and not get left number three. So I ended up pulling the trigger on this odd Swiss franc. You can see that we showed momentum out of here, and then we kind of consolidated sideways within this structure, which is normal. This is nothing for me to get freaked out and close my trade and worry about my loss. That's not what trading's about, guys. Trading is literally 10% skill set and 90% mindset. So if you can figure out a way to, really get comfortable with accepting that, hey, there is a chance that I can lose. If you can get comfortable with accepting the amount you're willing to lose, then you're going to be in really good shape. I would much rather be wrong, trusting myself, than being wrong and trusting somebody else who threw me a signal. I don't hand out signals in my private platform. I only hand out market analysis such as this, and then it's dependent upon you to find your entry so that you can become a self-sufficient trader. And so in this market right here, I closed out. It was 30 pips. Not a bad week in the market for me at all. A little over 1,000 plus. So it's been a solid week. It's just you have to be really cognizant that this is a week of manipulation. Anytime NFP is happening, guys, you're just going to see markets kind of stall out in key areas, kind of just bounce back and forth in small ranges, throw wicks in areas that have a lot of liquidity, and then it doesn't really move. So we are getting out of this week, so don't worry, guys. If you felt like, hey, I can't read this market, it's not that you can't read it. You might just need a little bit more time. You might need to sit back in your chair a little bit more and allow the data to develop. So this was a beautiful odd Swiss franc setup. I wish this entry would have came today on this live session. I think this would have been a great trade for all of us to either look at and consider taking. But it happened overnight. I think this candle happened, yeah, so this was around 11 last night. So this happened a lot later. And you know what? You just put it in there and then you literally just, set your stop loss and you've already calculated what you're willing to lose. And there's no other risk involved. You're good. Your mindset's not fluctuating. Your emotions aren't taking control. You're in this market with all neutrality. Because if you're not, the market's just going to play around with your emotions, and that's what you have to get control of in this market, is really getting control of the emotional fluctuation that every single trader will experience. Because as you go to make more profit, that means you're also increasing your lot size. So with that comes different levels of drawback, right? If I'm putting $1 per pip versus $10 per pip, the drawback might look a little bit different. And just to touch on that very quickly, and I'm placing a lot of emphasis on psychology just because this week is a week where you really need to depend on your psychology. Don't look at the dollar amount on your screen. Place the trade, place your stop loss, and then that's it. Don't, if you're going to analyze what the candlesticks are doing on TradingView. Don't go on your MT4 and just stare at your phone and look at like $300 in drawback or $800 in drawback, considering your lot size and your capital size, obviously. But don't just stare and get overly absorbed in that. That will kill your emotional control. Place the entry, place your stop loss, identify, where you want to take this market, and allow it to do its thing, and you'll see what happens. So it's not about having a 90% hit rate in this market. It's literally having the best losers, controlling your losses, and finding ways to make sure that your losses are still smaller than your wins. So we're going to jump over to the DXY. And if you guys recall yesterday, I had a note on my screen, and this is something that is one of my best practices. I like to come in here and just kind of throw like a quick note on the screen, because this will tell me if I really need to spend time on it or if I don't. This keeps me from over analyzing. If I don't have anything written down about this trade or this pair, I'll have to constantly reanalyze every single time. I'm trying to make this easier on myself. I don't want to add another moving part, considering we have all these different things that we have to take into account when we're trading. So as you can see, this says need more data. Yesterday it said we'll either break beneath this 4-hour last line of defense, which is my last level of structure, in order to hold the bullish momentum, or we break beneath. So as you can see, we ended up breaking beneath. We had a beautiful close beneath this 4-hour last line of defense. So now, guys, there's still nothing for me to do yet, right? I just have what I call insight into the market at this point. And you're going to see, like, during these NFP weeks, you're going to see a lot of shifts in structure. It's like, it's always like this. It's not a coincidence. It's by design. So this is our new low. All right, so new low on the DXY. Again, guys, if you are not looking at the DXY, but you are a Euro USD, a GBP USD, an AUD USD, NZD USD trader, then you should be looking at the dollar index, because it has correlations. It will negatively, which means moves inverse of your GBP USD, your Euro USD. So the next part of this is I identified the break in the structure. Now I don't want to see price trade back above this high. So as long as price does not trade back above this high, then the market structure is intact for bearish continuation. We don't know that yet because we are still in this pullback. So right now we're just in a weird, awkward position right now in a lot of our pairs, at least a lot of the pairs I trade. So it's requiring the discipline, the in-between moments, to just sit and wait. So right now, two things can happen. We can either break back above this high and maintain bullish structure, or we don't trade back above this high, we stay underneath of it, and we continue to push down into this area. That is what I'll be looking for going into next week. I don't anticipate a ton of movement, finishing out this week, going into the holiday next week, but I'm definitely open to allowing price to give me the data, and it's as simple as that. So I'm going to glance down here at USD CAD. So at USD CAD right now, guys, we're at an important level. And with trading, guys, it's going to come down to finding the highest probability setups with the lowest probability of risk. So highest probability for me, personally, I define that as meeting my confirmation list. So I have a set of confirmations that I teach my students. They're very sequential, things that get me set up and then things that get me in the market. And I'm looking to get in at, on with those confirmations, with all those confluences, with a small stop loss, because I can hit a 10, 15 pip stop loss over and over, not even risking 1% of my account, because when I do hit, my trade is large enough, my analysis is large enough, my time frame is giving me a large enough picture where I'll make up for those, couple of losses that hit my 15 to 20 pip stop loss. Um, and so I'm not worried about it. So right now, I will say that we are in a really key area for USD CAD. This is a level of support that was established to create this new high. So we want to make sure that price is either staying above it. All right, either staying above it, bouncing off this level. You can see we had 1 touch, 2 touch, 3 touch. Now we're starting to have a 4th touch on it. Or does price come here and break beneath? Because remember, the DXY has broken beneath a key level of structure. So we don't know if this is going to turn bearish. But even if you took a buy here, guys, and it didn't push all the way to this high here, you'll still get some pips, you'll still get some profit, and it'll still be a nice return. So that's what I mean by taking super high probability setups. Right now, I see a buyer's market, so I'm going to look to buy things off of support levels. This was support, this was support, this was support. All right, so I'm always buying off supports, and I'm always selling at resistance levels in a seller's market. So for right now, guys, again, it's a slow week. It's already 11:16 into New York session. We might not see a lot, guys, and this is by design. Tomorrow we have CAD news, so this might be something you want to look out for. Do we handle this with bearish, bullish, rejections over and over so that we can push higher, or do we end up breaking through with the CAD news? So again, a waiting game, guys. This week is a complete waiting game. I can't emphasize this enough. I can't wait to do, the market sessions in the coming weeks, because we get to actually see these trends start to unfold again, and we'll be able to definitely capitalize. But for USD CAD, I do see that we're just rejecting here. So very interested in seeing what happens at this level. All right, moving to GBP odds. So yesterday I shared with you guys that I had taken a trade off this level here. So we pushed, created this new low, and then we originally tried to create this level of resistance here, pushed away, pushed higher. I did take a sell right in here, and as soon as we got away from my entry, and I have a really strict policy on my break even, guys. I'd rather get hit break even 100 times instead of try to just risk my stop loss every single time. Because what happens is when I move break even, if price keeps coming back to my entry, that might be an immediate sign that price isn't ready to move in my desired direction. And the only reason I know these things, guys, is because I've been trading for 5 years. I have a trading journal where I stalk all of these kind of patterns and correlations in my trading, and it's really detailed. You must learn to refine. But this is why break even is something I love. As soon as price pushed away here off this level of entry, you can see price snatch back and knocked me out break even, which means no loss. That means I protected my mindset. My mindset's still intact, and now I can continue to reanalyze without any influence of taking a loss, right? Because that's the hardest thing as a trader, is having the short-term memory to say, hey, I took the loss, whatever, new day, new slate, it's just new, it's a new me, new day. That's hard for traders, especially new traders. So what break even does is allow me to say, hey, whatever, I just got hit break even. I lost no money in my account, and I'm still in the trade. I'm still in the trading game. So guys, I mentioned if price does break back above here, we could start to look for another possible, reaction off this level. That's exactly what happened. I ended up placing an entry here. So I had a 30 pip stop loss. I'm still in this trade. I am break even. This definitely can push higher. We are squeezed against a key area of support here, but if it does not, then I'll allow it to run. My TP is actually here, so I'm trying to push down into this area. But if we continue to push higher, I might just manually close, take a little bit of the profit off the table, and reanalyze. But it's a waiting game. So guys, I'm not sitting here staring at my phone, looking at the dollar amount fluctuate. That is a self-control, emotional intelligence killer. Do not stare at the dollar amount. You don't need to, because you've already calculated what you're willing to lose. So if you're willing to lose 300, I don't care to see if I'm 180 bucks and drawback, because I'm willing to lose 300. So don't look at the dollar amount. And the same thing goes when you're in profit. Don't look at the profit and say, I'm up 500, I'm up 600. That could, alter the way you're holding the trade. So find ways that keep you very objective. For me, it's not even looking at the dollar amount. I don't care. I'm just looking at my levels. I'm just looking at price. and I'm allowing price to develop. Just because price starts to push up here a little bit doesn't mean um, it's going to turn around and reverse on me. It just might be pushing up and dancing around. Allow the market to dance. It has to have room from you to dance, but just find ways to protect the capital so that you can later evolve it. So right now, still in this trade, I'm pretty sure up like 90 pips. Yeah, 90 pips, so very, very light. And I mean light in the sense of this wasn't the easiest trade setup to take. A little more advanced. There's way cleaner opportunities that come throughout the weeks that I can't wait to take advantage of with you guys. But for right now, this is, what we're working with in the market. There's not a ton. A lot of our pairs are in this sideways consolidating movement. Like NZD Swiss franc is a pair I love, but I had to accept that it looks like this. All right, I had to completely accept that the market is moving sideways, guys, and it's been moving sideways for 13 days. So this is one where, again, if you come in the market and you're like, I can't read that, it's not because you don't have the skill set, you don't have the knowledge, you're not incompetent. It's just because the market's not readable. This is not something I should be trying to force trades on. So again, I'm trying to find the highest probability anywhere that I can in this market, guys. So with that being said, let's just glance back the XY. This is all, I have for us at the moment. As price starts to trend, we'll have a lot of opportunities. I'll even glance at an odd CAD. Just to give you an example of what kind of markets we take advantage of. So my team over the last couple of months, we've basically almost caught this entire movement here from when it first started here. And this took 29 days. So beautiful month of trending. And this is what we're going to take advantage of in these next market sessions. We're going to take advantage of markets that trend like this, guys, because look how easy it is to read versus now I'm starting to get in this mess right in here, right? So I understand this is my last line of defense, and I can see we're just wedged here. We're just stuck. Nothing happening here since a whole day of just sideways consolidation. And this is what I mean. We're just seeing sideways movement. But guys, when we start to trend again, you're going to take advantage of this with me, and we're definitely going to make some money here, and just give you a chance to see the market the correct way. So with that being said, guys, go work on your psychology. Don't just stare at this market all day. It's not going to do anything too drastic that's going to excite you. Go read a book about psychology. Go watch a YouTube video on psychology. In these moments, guys, it's not, what you do while you're working. It's what you do while you're waiting. So go learn some things about yourself. Open up a Google document or a Microsoft Word document and write out the things that are non-negotiables in your trading. So for me, I'm not trading ranges. I'm not trading on Sunday. I'm not trading at 3 p.m. So those kind of things I had to learn through my trading plan. But I wrote them in a spreadsheet that says, hey, before you get in this market, Lex, review these things about yourself that you're not willing to allow to happen. So with that being said, guys, we will be live next week again on our market session. For those in the United States, enjoy your holiday, and I'm going to get out of here, and let's see what happens tomorrow at NFP. And as this market continues to evolve and develop, we will make sure to take advantage. Much love to everyone on this call. Thanks for getting on, and I'll see you next week.